We'll get started. Okay, we are live streaming now. Welcome to the Rebel Dividends weekly update. I've added a lot of stats to the email page that goes out, which you can also see on the replay page. And it also links to the three reports this week. So week over week, we're up 8% and then about another 8% this morning. Hype has pulled back from 45 slightly intraday, but everything's looking really good. So I'll quickly go through the summary page and we'll hop into the specialized content. So the Rebel Dividends share price is up 30.7% year to date. We're seeing equities indexes start to rebound. They were down, I think, 7 or 5% on the SPY and NASDAQ last week. And funny enough, the move Trump did to block the Hormuz Strait was basically the checkmate move to get the markets popping back up because now they know China is going to have to pressure Iran to make a deal here. And it looks like they're actually very close to closing a deal when JD Vance was out there. But they are arguing about whether there's a 2-decade ban on uranium enrichment. Long story short, I think their intentions this whole time was to clog up the oil supply to China and force it into a deal, which is coming up in May 15th. So they've cut off Venezuela and now Middle Eastern oil, and putting a whole lot of pressure. Meanwhile, all of the big tankers have rerouted to the U.S., giving America a massive edge in energy. So yeah, it was quite chaotic to watch this all play out, but now all the pieces are coming together and it makes a lot of sense. Some indexes are screaming higher, like the AI index, the semiconductor index, SOXL. So we're seeing markets really jump and leap higher here. We're going to cover why we think Bitcoin is going to do extremely well in 2026 and probably dominate in 2027 in this presentation. If we compare ourselves to Bitcoin, we're doing much better. Bitcoin's about flat on the year. We're up 39%. For the year, if you look at the lowest price we had this year, we're up 50%. And since the pivot, we're up 111% versus 19% on Bitcoin. So absolutely doing way better than Bitcoin itself. Now, this is quite remarkable. I hadn't thought about this. If you go down here, if you had been collecting dividends versus reinvesting dividends, the net return was about an $86,000 spread. And you can see there were some points where you're up dramatically more with reinvesting. But if you look at this number right here, the weekly income for someone who would switch today versus having collected the whole period is dramatic. So you'd be at $3,175 a week in income compared to $673 if you'd been reinvesting this whole time and then switched at this moment. So that's the power of compounding and buying every dip automatically. Okay, so we will look at some of these stats. We now have 103 weeks of consecutive dividends, whether it was good, bad, or somewhere in between market conditions. The total return for collecting cash is at 111% since the pivot, and reinvesting is at 196%. So you got about an $85,000 spread there. And again, why volatility works for the reinvestor. Over the last 25 months since the April 2024 pivot, 13 of those months were down months. So reinvesting automatically bought the dip and helped compound your position. So today, if you had, if you'd done this entire period and decided to switch over, you're making 4.4 times more weekly income. Now, we believe this will be the same story in about 12 months when Hyperliquid climbs to 150. And now 150 is really the low end of our price projection for Hyperliquid. Today, we're going to go into why we think it'll probably end up in the $300 to $450 range if we look 2 years out. And that's based on everything repricing with Bitcoin breaking into a new high into the $150,000 to $200,000 range in 2027. A quick reminder, your tax-free dividends will show up as the third box on your 1099 div this year, assuming we don't realize any gains. Your dividends will be tax-free. So we'll cover that again in a minute. Okay, so this presentation on the Hyperliquid presentation part of the content today, we'll look at why we think $150 is too small of a price target for Hyperliquid. They are not just a perpetual futures market now. Now they're trading every asset known to mankind. Their user base is growing rapidly. We're probably on the verge of deregulation in the US so that they can open their markets up to all of the US. Currently, it's people sneaking in with VPNs. And then we'll look at if the price of Hyperliquid revalues itself to multiples similar to other exchanges, and we get the total market space of cryptocurrencies to about double towards 150,000 Bitcoin, why a $300 to $450 price target is very realistic. And then we'll finish up with the big macro forces. So we'll look at, the AI explosion. This year is really going to be peak capex, peak expansion. And then into 2027, they're going to start having some bottlenecks, and that's where we see Bitcoin really having an edge here. Now, by no means are we expecting AI to stop growing and be a huge force that's beneficial towards us. But they're growing so quickly that we can see some pretty clear bottlenecks starting to develop.
Okay, all sorry about that. We're having some technical difficulties there. Just give us 1 second here, guys. Jason will be back on here shortly. Sorry about this. I know Jason switched out his new computer and has had some had a few learning curves along the way there.
Okay, sorry, I'm back. Yeah, actually, funny. We have AI agents running, slowly taking over all aspects of our company. We're about to have an online portal up, so you guys will have real-time stats. That's fidelity level accounting here. But this particular computer has a program that if the memory usage gets even close to load, auto reboots itself, and I didn't snap that would be affected by the webinar, so I apologize. But yeah, big upgrades in the whole backend infrastructure is coming to all our products, starting with Rebel Dividends here.
Hey,
Okay,
Jason, you
great.
want to
Is this
pop into full screen? Yeah, there you go.
okay? Great. Okay, great. So we will just jump in to the reports in a moment. We're up to $20.9 million in dividends paid out, $900,000 cash balance. Either this week or next week, we'll be sending a test transfer to all of you guys. And we got a new fintech bank up that automates the process of converting cash into stable coins or stable coins into cash. So we're going to start testing that, and you'll be getting dividends from our new banking partner probably within the next 2 weeks, starting with a $10 transfer test, hopefully by the end of this week. So just a quick heads up there. We've updated the monthly return table, and very good. So let's see if there's any questions out there real quick before we jump into all the new content here. And then also, again, if we think we're going to have to realize taxes in 2026, it's basically this scenario right here, where we've climbed to, to 100, uh, excuse me, this is the current return. Once we go to the forward return, you'll see once we get to 150, the returns will be massive. So it'd be a good thing if we had to make you pay taxes on your dividends for 2026. Bill is saying, will that test transfer go out even if we are reinvesting dividends? Most likely, just to make sure every single bank account is working properly. So with about 150 shareholders, it's only $1,500 for us to do the test. I'll send out an announcement when that does occur. Okay, so today we'll start off with look at Hyperliquid, how to value it, what the big moves are in going on in Hyperliquid currently, and then we'll go into the macro review after that. A quick update on the tokens. We're in the final testing stage for the Bull token. We're negotiating deals to have this listed in different centralized exchanges, and also looking at being able to natively have it live on the Solana chain, ETH chain, and the Hyperliquid chain. So hopefully by next week I can actually demo the vault and buying and selling it. Shortly after that, we'll have Bear token and then the volatility token. So Bull is going to be 3x Bitcoin and Hype auto rebalanced with a cash buffer. So that cash buffer basically protects it from ever going to zero and helps smooth out its return. The Bear token will be short Ethereum and Solana. So basically, we see Bitcoin and Hyperliquid having a really nice uh, ecosystem that grows together, whereas Hyperliquid is basically attacking and taking over a lot of Solana and Ethereum's market. So we think those two go very well together. The volatility token has a huge cash position with a massive short on Bitcoin. And so it'll act something like the VIX. So again, those will be the first three tokens we take to market. And I'll be covering that more next week. In the short term, obviously, the price of Hype directly creates the returns in our share price. Okay, so $150 is now our minimum target. 300 to 450 is clearly in sight. Hype was at 45.10 this morning, and your Rebel dividend shares were at 0.00197. Protocol is generating 714 million a year in fees at the current annualized rate. They did do closer to a billion in their first year, and it's destroying its supply every single day, getting more valuable every week, whether the price reflects it yet or not. At 150, we get to a market cap that's still smaller than the NASDAQ for a protocol generating more fee revenue than the NASDAQ. That's our minimum case. When Bitcoin hits all-time highs, which we think will happen in 2027, we'll probably be edging towards that and breaking our recent high in 2026. That's when we can anticipate a price that's higher in the $300 to $450 range. So basically, we're accounting for the revenue to grow from a billion a year to 2 billion a year over this period, and for the multiple to expand to where we're seeing other companies priced at that are basically stale and not growing. This is our return at each price target. So we're at 114% return at 75, 321% at 150, and 629% if and when we hit 300, based on the current value of Hype. Again, we modeled out a potential chart of Hype. Who knows if it'll play this exactly? There's a lot of volatility in a growth asset that's this small, with in its first 2 years of being alive. So the volatility is really a feature that's good, and that's how it hits these huge returns over the course of time. Down below, we have a potential price path for hype hitting 150 with two significant pullbacks. And it's just showing you the power of basically reinvesting your dividends. One ends up with a 321% return at $150 hype, while the other would end up at 403%. Okay, we'll keep looking at this each week. We did not overtake Dogecoin yet. We did take out Cardano a few weeks ago. Hype is the number 10 by market cap, and here's a simple reason it moves higher. The coins above it don't make any money. Hype's earning $714 million a year and burns its supply. The rest of them increase supply and either don't make money or lose a lot of money to basically run their network. So here's some of the competitors to take out. We got Dogecoin at number 9. It's a meme coin from 2013. It makes no revenue. It has no purpose. It's worth $14 billion on Elon Musk tweets. And it costs about $500 million a year to run its network. Tron, built by Justin Sun, who has active SEC charges. It's basically old tech that's being replaced by all the stable coins out there in various bridges. But it's basically all it does is help you move Tether from one chain to another. And it's sitting on a $30 billion market cap. XRP, the $82 billion bet on a regulatory outcome. It's 12 years old. It's mind-boggling. It's still up there. It earns no protocol fees. It has no buybacks and has no users for the most part at this point. A more serious competitor is Binance. Binance was basically raided by the US and is being monitored there, probably trying to help catch money laundering for our adversaries. They have massive overhead, are highly hated in the market, and basically continually take advantage of its users and the market in general with a lot of bad practices. They've tried to attack Hyperliquid every way you could imagine unsuccessfully. And now they're playing catch up. So just last week, Binance announced oil perpetual futures. So they're one step behind. And again, they're just overweight in bureaucracy and expenses. Furthermore, they are not decentralized.
Okay, guys. I think we just dropped the audio there for a second. And Jason will be working on that. Give us just a minute there, guys, and he'll hop back on here. Okay, perfect. Yep, he's getting it resorted there, guys, and he'll be back in shortly here.
Okay, I'm so sorry, guys. I guess the computer takeover happened again. So right now, Binance is KYC. Everyone who goes in there is tracked by the US government. Meanwhile, Hyperliquid is decentralized. There's no identity attached to accounts. So it just gives us a huge advantage here. Big picture, Hyperliquid's expanded from just trading perpetual futures and allowing spot trading of deposits, withdrawals of main assets like Bitcoin, Ethereum, Solana. They've moved and taken over the weekend trading for oil, gold, and stocks. It's the go-to place. They're now coming in on the prediction markets, attacking Polymarket and Kalshi's markets, And now we have three big ETFs filed for for a hype ETF, Grayscale, Bitwise, and 21 shares. So everything's really moving in our favor here. In this screenshot, we're looking at the perpetual futures markets for real world assets, stocks, gold, commodities, and you can see a little breakdown there. The most understated powerful feature of Hyperliquid is its buybacks. In 10 years, if they continue the same growth path, there'll be around 30 to 40% less tokens available compared to today. There's just no stock that's ever had this size of a buyback scheme, and we're really just in the first inning of it, the first year. If we look at some of the competitors, we have the NASDAQ to really compare ourselves to with a $50 billion market cap. Um, it's it's got 5 billion in annual fees with about a 55% profit margin, but it's basically a stale company that's not growing. So we have the fastest growing exchange that's expanding into each market with basically no overhead, and all of its profit margins are burning its own tokens. Even during pullbacks and chaos in the economy and geopolitics, we can see the user growth steadily heading higher and higher. Currently with an all-time high of 252,000 live traders daily. So $150 is just to reprice it to a fair value. 300 to 450 is when the broader crypto market wakes up. So we're basically anticipating Bitcoin will double to 150,000, and during that period, Hyperliquid's fees will grow from 1 billion to 2 billion. Okay, so that is our update on Hyperliquid. Hopefully the computer doesn't shut down on me. I'll have a special machine set up that doesn't have these bots on it. I apologize for the reboots. Today we're going to look at the macro forces, 6 independent macro forces, all point to Bitcoin as a top performer 2026, and I think it'll really take the lead in 2027. So the headlines this week look like disorder, the Hormuz blockade, oil falling from 115 to 92, the Federal Reserve waiting on rate cuts, Japan's bond market continues to be under pressure. Bitcoin's up 3.4% on basically the blockade of the strait, and really it's the market realizing Iran's trapped and it's going to have to make a deal here. This report makes a case that Bitcoin, the best performing major asset class of the past decade, is positioned for its most compelling run of the current cycle, and explains exactly why, using evidence that does not require you to already believe in crypto to find it persuasive. So if you've spent your career in traditional finance, Bitcoin may feel unrelated to macro forces. The evidence suggests otherwise. Bitcoin shares the defining characteristics of every asset that has protected wealth through monetary crises: gold, land, fine art, but with properties uniquely suited to the modern era. It's a fixed supply, global portability, verifiable scarcity, and immunity to government debasement. It's basically gold is the analog store of value that protected wealth through the 20th century. Bitcoin is the digital equivalent built for the 21st, with a provably smaller and more fixed supply. So when the forces that drive gold higher are in motion, Bitcoin historically follows with a lag and a larger move. Now the yen carry trade messed us up, but we're going to look into that. While their bond and currency market continues to get hammered, we're no longer seeing that impact Bitcoin in a negative way, which is going to be important. It means there's a massive catch-up trade brewing for Bitcoin. Okay, bottom lines up front. The Trump's Hormuz blockade is not chaos. It's a calculated pressure on Iran and China simultaneously, with America winning the energy cost war. So May 15th is when we have the China Trade Summit, and we've put a lot of pressure on China to cut a deal. If that deal is cut, that's a massive bullish catalyst in the near future. The AI trade is likely going to slow down after 2026, just due to supply constraints. It's probably a short-term speed bump for CapEx growth, with 2026 already. Basically, we're seeing every AI product out there running out of compute power. They can't build these data centers fast enough. Everything that was planned for 2026 going smooth, but they're certainly going to have to get creative in 2027. So this gives Bitcoin the potential for Nvidia to stop being the most exciting trade. And with Bitcoin 41% below its high and the same macro tailwinds as gold, rate cuts coming, this is the big rotation play. And it's a much smaller market cap than the AI sector, about 1/16 if you look at just, a couple dozen of the top companies in the semiconductor and AI space. So a lot less money rotating is needed for Bitcoin to really scream higher. The Fed is 225 basis points over tightened. Real-time inflation's at 1.4%. They are taking their time. Powell is out after this meeting. And I think the new Fed is going to be quite aggressive with rate cuts. Each cut drives the M2, the money supply, dramatically higher, and Bitcoin has a 94% correlation to M2 supply. Gold has priced the fear. Bitcoin hasn't priced the recovery. Gold's up 100% in 12 months. Bitcoin is 41% below. This is the most obvious catch-up trade, repricing trade that I've ever seen. And we're probably weeks, if not months away from it really taking off. If we look at major asset classes in a 5-year, 10-year, and annualized rate, Bitcoin has dominated. Last year was a really bad year for it. Started off strong, then the yen carry trade kind of exposed its weaknesses to leverage. That's behind us now. But its 5-year return is 892%, 10-year is 10,400%, and its annualized return is 55%. So no other index comes anywhere close to that. You have to look at specific stocks to really find anything that's come close to the same return as Bitcoin. So some realistic Bitcoin price expectations. Q2 probably break through 85,000. Q3 we can see it hit 115,000 with the first rate cut and the Clarity Act starting to pay off. And then Q4 into Q1 of 2027, we'd expect it to be breaking into a new high and heading towards $150,000 to $200,000 price target for 2027. Okay, so the U.S. Hormuz blockade is not a war with Iran. It's targeted economic coercion applied to two adversaries simultaneously with a single action. The China angle is the one most analysts are underweighting. 80% of China's oil imports flow through the Strait of Hormuz. By blocking the strait and simultaneously threatening 50% tariffs if China arms Iran, the administration has created a choice for Beijing with no good option: abandon a strategic partner or face catastrophic tariffs plus an energy crisis at the same time. So this is all leading up to the trade deal that they had trouble with last year, obviously, May 15th. So Iran's not going to close the strait. That's how they make all their money. And now they have no income source. So I'd expect Iran to come to the table with a Okay, we're back. I'm so sorry, guys. Okay, I'll try to skim through it so we get to some Q&A. You have links to all this. And for now, let's just take a break and see if anyone has any questions up to this point. But the big picture is the yen carry trades behind us. The geopolitical mess is wrapping itself up, and it's going to lead to a trade deal with China. And we have a lot of rate cuts coming, with Bitcoin needing to catch up to its correlation to the M2 supply and to gold. And I will have this computer. I'll just have a separate computer for the webinars. I apologize for all the reboots today. Okay, guys. So I'll go ahead and go back to the summary page. We are up about 8% week over week, up 8% day over day. We got a question from Rich. Rich is asking about the impact of our tokens that are coming on board. Yeah, so right now the balance sheet's at $13.7 million. So if we just double to 80, that adds another $13.7 million to the balance sheet. So for the token business to have a similar impact, it's going to need to start generating about $1 million a month of income, assuming it takes 12 months or less to double the share price. So in the very short term, the price of hype is the most important thing to us. Longer term, if we look out 2, 3, 5, 10 years, the token business is planting a seed to grow a tree that will provide income to us and grow consistently and create cash flows uh, more predictably over the longer course. It also creates a potential part of our company that we could sell to someone like BlackRock for a very high multiple. So that's the reason why we want to get uh, these software businesses making money. It also qualifies us to not just be a holding company, which means that if you hold your Rebel Dividend shares for 5 years, the first 10 million in profits are tax free. So even if the software business has never amounted to anything, the tax benefit is worth the effort at a minimum. Now, I do think these products will be very successful and at some point overtake the profits we make from our holdings. But that's kind of a quick answer on that one.
Yeah, great question, Rich. And we do have one token trading now, guys. It's the R Hyper. Um, so yeah, down the road, Rich. What do you think, Jason? Maybe like a year down the road, that's when we'll see like big impacts for what's going on the balance sheet and that type of stuff from the tokens.
Yeah, hopefully less. Trade XYZ did nothing for 3 months and then jumped to an $85 million a year business in the last 90 days. So, and they're the ones that came from Hyperunit, which is basically how you can deposit Bitcoin straight into Hyperliquid or Ethereum. So they're really the single biggest success story within Hyperliquid currently. Um, and they're starting to give Hyperliquid itself a run for the money in terms of revenues. Uh, they're making anywhere from $300 to $500,000 a day. So yeah, it's quite possible that in less than a year, the cash flows from the token business could be extremely profitable and make a big impact. Where it really shows up is if we're able to exit the token business to someone like BlackRock and get paid, 20 to 30x what it's making, because then it would be a massive, basically balance sheet item to grow the share price overnight. And that's really the goal with that business. So, one, create income. Two, have an asset to sell at a high multiple to grow the share price. And then three, it changes the classification of our company to give you guys a huge tax write-off if you hold your shares for 5 years. So it's really a no-brainer to push that as hard as possible for all three accounts. Okay, very good, guys. Well, I'm going to go ahead and close it out before I get kicked off again. I apologize. This is my super fast computer, but it's sitting there making content to grow our business here for the token business. Actually, it's creating a YouTube channel to create videos about Hyperliquid and get a huge audience to push the token to. And it's got a security measure, so if the RAM gets low, it auto reboots. So I won't run the webinar on this machine next week. Any last comments from you, Dean? And next week we'll spend a lot more time looking at the token business and how it's going to operate.
Yeah, so a couple things, guys. I'm not sure if you guys looked at the links I posted in there. I encourage you guys to go through those 4 links when you get some time. It's really great content. So that would be the first thing, and you can just in the chat box, guys, just click on those. Um, the one thing that really caught my eye this week, Jason, about Hyperliquid was looking at what they're bringing to market with the prediction markets. Okay, so you guys have probably heard of Polymarket and Kalshi by now. You can bet on anything under the sun. You can bet on outcomes at the end of the day, right? You can literally bet if Bitcoin's going to go to 80,000 today or not, right? So anyways, in 2024, the volume there was it was like 5 billion, okay, total trading volume in the year. In 2025, it ramped up to $65 billion. And Polymarket and Kalshi combined are basically valued at over $40 billion. So it's really cool, guys. Hyperliquid's going to come in with with an interface basically that is going to allow you to not KYC. Okay. So without government tracing, without taxing implications, you can go in there and make some big bets. So that kind of tells me is just like Hyperliquid attracted a lot of the institutional players, a lot of big money players when they started up. I think a lot of those same players from Polymarket and Kalshi are going to come over to Hyperliquid to place those prediction market bets. Okay. So, yeah, look, and again, just the valuations of Polymarket and Kalshi right now are 40 plus billion. So obviously this could be very accretive to the market cap of Hyperliquid. Now, part of the reason why I think they're going to transition so quickly, at least on the really smart money side, guys, the rich people and the institutional investors, it's because their fees about 100 times less than the existing stuff out there right now. Plus, you have to go through that KYC and AML process, which you won't with Hyperliquid. So that's a massive thing. So yeah, that should be happening before the end of this month. So that's near-term catalyst. I thought that was really cool. I had no idea, Jason, that went from 5 billion to 65 billion um, in a year on the predictions market. That was pretty incredible. And yeah, I guess
Yeah,
again,
everyone's
Hyperliquid's.
tired of losing money in crypto, so they're going to the gambling markets now.
Yeah,
Yeah, and
yeah, that
another
too.
big advantage is that Hyperliquid, you don't have to deposit money. You can use your current positions as collateral. So now you can have twice as much fun
Yeah,
compared
exactly.
to using the other platforms.
Yep.
Also, we're seeing some Senate bills going in to attack the Kalshi's prediction markets related to sports, which is a big part of their business. So the sports betting, franchise old school uh, lobbyists are trying to protect their markets and kick Kalshi out. And of course, Hyperliquid is out of
is out of U.S. jurisdiction, is what Jason was going to say there. Jason, you lost your audio again. Um, but yeah, guys, so Hyperliquid's outside of the U.S. markets, and then you can loan, let's say, you know, you're a private equity fund, you have a $14 million position in Hyperliquid, and you want to take a bet, but you don't want to sell some hype to take a bet. You can do that with Hyperliquid's platform. You can't do it with Polymarket or Kalshi. So okay, all right, guys. Yeah, guys, if you do have any questions you want to add to your position before hype gets to 150, again, it's trading about $44 right now, guys. Give me a call. The number is 505-559-0967. Thank you all. Have a wonderful day.